Welcome back to Yahoo Finance Live. We are seeing shares of Mondelēz slipping in this session right now, down nearly 3%. On the back of its quarterly results, out yesterday, the company behind Oreo and Ritz earning 66 cents a share on revenue of $6.6 billion. We did see the company raise its revenue forecast with a big bounce back in emerging markets. Let's bring in the CFO of Mondelēz. We've got Luca Zaramella. We've also got Yahoo Finance's Julia LaRoche joining in on the conversation. Luca, it's great to talk to you today. Certainly a strong quarter here, especially with EM seeing a bounce back there, but there's a lot of concern right now overall about cost and inflation. I wonder if we start there, what you're seeing from your perch on that front.
Thank you for having me, and good morning, everyone. Well, inflation is clearly on the rise, not only in the US, but in many places around the world. It revolves pretty much around key commodities for us, and they have been on the rise since the beginning of the year. We have been favored so far because we had long coverage, and so some pressure is going to come into the P&L. Besides that, logistics costs are on the rise, and obviously labor. We still have a captive system in the US in terms of distribution and delivery to stores, which we call the SD system. And so we are somewhat insulated, but given the high demand that continues, we are still facing some headwinds, particularly in terms of logistics cost and labor costs as well.
Luca and Julia LaRoche here. Of course, the big conversation for a lot of companies has been those inflationary pressures. Just curious, from maybe a pricing standpoint, what kind of elasticity do you see for you all when it comes to pricing, and what might consumers expect across your portfolio?
I would start maybe by talking about what we call cross elasticity. This is clearly unprecedented inflation in some places, specifically in the US, and obviously, we expect prices to go up and to continue to rise potentially for a certain period of time. And so I think importantly, the relative level of our prices compared to others is going to stay unchanged. And I think consumers somewhat are getting accustomed to higher prices as well. In terms of elasticity, it is fair to say that our brands have been favored compared to others. And so people are still looking for comfort around snacking, and they tend to favor big brands and brands they can relate to, like those that we sell. And so I expect in terms of elasticity, not a big impact. On top of that, we are pushing forward what we call revenue growth management, which is about not necessarily moving price points, but offering multiple sort of solutions in terms of pack sizes, etc. And so that capability that we have to ensure we don't vacate price points and we keep certain critical price points is something that has to be kept in mind in terms of mitigating the impact of elasticity.
And certainly the results have shown strength in the first half of the year. And I was wondering, Luca, what kind of data do you all have around the share gains, specifically, the penetration that you all have made, new customers, and the retention of those new customers? I remember about a year ago having the conversation with you all with kind of people revisiting these brands, if you will. How have you kind of seen the retention play out?
The retention is quite good, quite frankly. Last year, when, in the middle of the COVID crisis, we as a company executed very well around the world. There was a part of the share gain that was related to our ability to execute better than others. But as I look back and I say, how much share have we gained last year at this point in time? What I can tell you is that we are retaining 3/4 of those share gains, and they were material and they were broad-based. And so the continued investment in our brands, that is the core part of the strategy, is paying off. And I have to say, so far, we are happy, and we anticipate that we will retain those share gains for the remainder of the year.
As Akiko mentioned, you had emerging markets play a pretty crucial role in the quarter, up to $2.29 billion, 20% higher than last year. I mean, when you think about how the U.S. is different than those markets now, especially in the pandemic, I mean, what's the driving cause to invest there? Is it logistics constraints, concerns that we saw around the pandemic? What's going on there, and what can you point to as continued strength next quarter?
So the U.S. Last year had a terrific quarter in Q2. We grew after a Q1 again double digit, and so we are lapping elevated demand. For us, the North American business closed flat to last year, which means we are retaining those levels of high demand. In emerging markets, on the opposite side, particularly in places like India, last year there were material lockdowns that impacted the revenue base, and so we are lapping that. But reality is, whether it is the U.S. or emerging markets, what we see is an elevated demand level compared to 2019. And that is to testify that, again, our brands resonates well with consumers, and that in tough times, people tend to find comfort in snacking, and our brands are there with them. And again, chocolate and biscuits specifically, as I look at the category, the numbers are terrific. And so we are very happy with the elevated demand, both in developing markets and developed markets.
Luca, I probably found a little bit too much comfort in the number of Oreos I've eaten in the last year, but I do want to bring up the impulse channels, which we know a lot of the on the go snacking, it really suffered during the pandemic, specifically things like candy and gum. What are you seeing in those spaces right now?
It is absolutely true that consumption on the go and convenience channels and impulse channels have been more impacted than others. And obviously, mobility rates being down versus 2019, they impact mostly gum, which is an out-of-home consumer habit. We see the category still trailing versus 2019. As I said yesterday during the call, it is still 80%, so not a great number. But reality is, as mobility improves, we start seeing improvements. And so my hope is that towards the end of the year, the situation will be much better. Having said that, I don't expect necessarily the category to go back fully to the level of 2019. In that context, we are executing well, we are investing in our brands, and we are gaining share. But again, reality is the category is not where it should be. And I'm not sure, even with mobility constraints being lifted, the category will ever go back to the levels of 2019.
Luca Zaramella, CFO of Mondelēz, it's great to talk to you today. And our thanks to Julia LaRoche as well for joining in on the conversation.